Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about the Ethereum Bitcoin valuation and the risk metric that we have to go along with it. If you guys like the content, please subscribe to the channel, give the video a thumbs up. Also, check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. So, for those who are unfamiliar, I have these different risk metrics for different cryptocurrencies to try to help me take profits whenever things get overextended. Okay, so these things are basically just based on price, time, and volatility, and I use them to remain level-headed even when things are getting really heated in the market, and it seems like things can only go up forever. However, anyone who's lived through 2018 knows, right, that it's simply not true. So this chart shows the Ethereum Bitcoin valuation on a logarithmic scale. This is a 10x from here to here and here to here, color-coded by the risk metric. And you can see that there's been two key times when it reached a risk level of between 0.9 and 1. And the idea of it reaching these levels is that historically it would be a good time to convert some of that ether back to Bitcoin. On the contrary, there's times where it makes sense to do the reverse, right? Convert some Bitcoin back to ether. One of the things that I find in these markets is, it's good to not get married to any single coin, but to use them as vehicles to increase your wealth, right? If you get too attached to any single coin, especially if it's some obsolete altcoin that bleeds against Bitcoin forever, it can negatively impact your portfolio. So sometimes you just have to take a cold hard look at your portfolio, and cut the losers. It's hard, right? And there have been times in the past where I cut some, and later on they do pretty well. But you also have to look at the fact that if you cut them, you probably reallocated it to a different project. And how did that project perform? So Ethereum is one of the coins I'm most bullish on this market cycle. I do think it will have a better ROI than Bitcoin as measured from market cycle bottom, but the volatility on the way there is going to likely be a lot higher than it is for Bitcoin. Okay, there's probably going to be even more impressive moves to the upside and the downside. Okay, you don't have moves to the upside without also sometimes getting moves to the downside. Even during the last bull market that lasted from 2016 to 27 to the end of 2018, or the end of 2017, early 2018, there was a lot of downside volatility to the Ethereum Bitcoin valuation. It did not preclude Ethereum from going up 3 orders of magnitude over a little over 2 years. So just keep that in mind. There will be downside risk. There will be upside. There's risks both ways. But at the end of the day, I generally do think Ethereum will perform well this market cycle, and will be there every step of the way. So, when we look at this risk metric, we identify two major times where it reached a blow-off top, right? Right here and right here. And for the astute observers, you may notice, well, in 2018, it didn't go up as high on the risk metric. And you may say, well, this doesn't make sense, right? How does this make sense? Because 2018 was the blow-off top. It's the Ethereum Bitcoin risk. Bitcoin was also in a bubble at the time, so the Ethereum risk against Bitcoin didn't go that high, because you could argue it wasn't that obvious that converting to Bitcoin when Bitcoin was up like 100x in 2 years, that was a good move either. Maybe it's an indication of out to stable coins you go. But be that as it may, you can see that these two moves were much more substantial than the final move we had in 2018 in terms of its valuation against Bitcoin, the Ethereum valuation against Bitcoin. You can see that it was these other two moves in 2016 and 2017, early 2017, were much more impressive than the late 2017, early 2018 move, because again, it's the Ethereum Bitcoin valuation. So this strategy is for people who primarily do not ever want to trade out to fiat or stablecoins for whatever reason. Everyone has their reasons, but would prefer to just stay in crypto and try to increase their positions systematically, and not caring if you sell some in the short term and the other asset keeps going up. You recognize the risk associated with it. Remember, it's not about the return, it's about the risk-adjusted return. One of the things we can do is take the risk out and plot it on a secondary y-axis, which is the yellow line, and generally note that maybe there's generally good times to be buying and good times to be selling. Ether against Bitcoin. Right now, we're still below 0.5, so you could say generally good time to accumulate Ether. It does not mean we can't go lower. It does not mean we cannot go to 0.3 risk or even lower, right? Anything's possible. It just means that if you were trying to focus on balancing a portfolio, it might help guide where you allocate new funds, right? It might help guide where you allocate new funds based on historical moves. And of course, there could be some limitations to historical moves, but that is the focus of this channel. So, with that said, well, how do you navigate this? Well, one thing to note is that the risk has reached 0.6 a couple times here in 2018, here in 2020, and it was when it reached 0.6 in 2020 when I did sell a portion of my Ether back to Bitcoin, okay? And it only looks like on here that it went above 0.6 once. It actually did it a couple times. Actually, this line I actually drew slightly above 0.6, but when you look at hourly time frames, it actually did go above 0.6 on several different days back in the summer of 2020. So the general idea is whenever the move does occur, to not get too attached, but to remember that the market has a way of shifting on a dime. Just like Ethereum was doing well in the summer, Bitcoin took over from late summer until at least early January. Maybe Ethereum's turning around now, maybe it's not. If Ethereum does turn around, maybe Ethereum will take the reins for a couple months. We just don't know. But what we do know is that if we follow a systematic metric that tries to help us convert between one asset to the other and do it without any emotions at all, then it might be a much better indicator than going based off, oh, well, Ethereum needs to get to this valuation so that my portfolio can be worth this before I sell it. Remember, Ethereum does not care at all about what your portfolio is. It simply does not. And I know a lot of people in 2018 who were waiting for their portfolio to reach some nebulous milestone, and because it didn't quite make it, they watched it go to zero. I also know people who had a milestone that was hit and it kept going above it, so they raised the milestone rather than cashing out, and it never hit the second milestone or the third milestone, right? We always have a way of moving the goalposts further and further back because we get into that mindset that it has to go up forever. And I will contend that it could go up for a long time. It could. Ethereum, I still think, Ethereum, while I'm not sure that it'll make it to a 5-figure Ethereum this market cycle, I think definitely, as I've said all along, 4 figures and probably in the upper 4 figures is possible. It's possible. We're not saying it's definitive. If we are up there, I'll definitely be moving most of my funds out of the market at that point. It's not to say that it can't go higher. It's just to say it's not worth my risk. It's not worth the risk to me anymore. I would rather take the profits and run and use that to better my life rather than nebulously holding out for an ever-increasing imaginative Ether Bitcoin valuation that I have in my head. So that's my strategy. It is a conservative strategy. It is not necessarily the most lucrative strategy. Okay? We need to be clear about that. If you just hold Ether from now until eternity and sell it identically at the peak, whenever the next peak is, then you probably are going to do pretty well. The problem, we don't know where that is, right? We didn't know that this was the Ether Bitcoin peak right here. We didn't know it was peak right here. We also didn't know that these were going to continue much higher. So what I do is I split them up. Y, 2Y, 3Y, 4Y, and 5Y. Imagine you have, let's just say, 15 Ether. You could sell 1 to Bitcoin when it gets to 0.6 risk, 2 when it gets to 0.7, 3 when it gets to 0.8, 4 when it gets to 0.9, 5 when it gets to 1, or something like that. That way, if it does peak at that level, right, if it peaks at 0.6 or something, at least you took some off the table, right? A small amount, of course, but at least you took some off the table. And you can look back and say, you know what, I took some off. However, it comes with the idea that you sell a small amount at the lower valuation so that it gives you the room, the flexibility to sell the most at the higher valuations, okay? So one thing that I commonly find when people use this type of metric is that they might sell a small amount here and then it goes up to this level and they're instantly left regretting, why did they sell here? Okay. The thing is we just simply don't know how high it will go. And if you go in with that mindset to me is better than going in with a deterministic mindset of it has to go to this by this date. It just has to, right? It has to. Now, I will contend that those people that follow that type of strategy, sometimes it can work out, right? It sometimes can work out. But I feel like there are going to be several times in life where that strategy just simply does not work out. For instance, anyone who is waiting for a $25,000 Bitcoin in 2017, or for anyone who is waiting for like a $2,000 Ethereum in 2018. We just never quite made it there. And at the time, it wasn't obvious that we would. It seemed like there was a good chance that we would. But hindsight obviously elucidates the truth and makes things seem so much more easy to navigate. You look back on it and you say, oh, well, it makes sense. It was a bubble. Back then, it never feels like a bubble to a lot of people, right? It never feels like a bubble. I ran a poll on my channel a few days ago, and I said, like, is Bitcoin in a bubble? And 50% of people said no. And maybe it's because they're thinking it's going to go to 100K in the next 3 months, which it could. But I would still contend that even if it did, it does not preclude the idea that it's currently at least in a bubble. This is my opinion. Take it for what it's worth. I understand that people disagree with me, and that's fine. Tons of people disagree in this space, and we're all just trying to use different theories to navigate the markets as best we can. So, not that trend lines are that useful, but I did notice that there is a general trend line here with the Ether Bitcoin valuation, or the Ether Bitcoin risk, I should say, slowly moving up, right? Slowly moving up, and got to draw the upper line, right? I mean, who would I be if I didn't draw a general channel here? So if we come back up, we're still pretty low now. You can see we're still between 0.4 and 0.5. If we come back up and we get to 0.6, and FOMO is just through the roof, it can't go down, etc., it might be worth considering taking some off. Not to say that that's the top. Biggest misconception on the channel. Just because I take some profits does not mean it's the top. It means it's not worth the risk to me. It might be worth the risk to someone else. But if I do take it off the top, I'm still holding the majority of my Ether if I am trading it back and forth to Bitcoin. Okay, and I would only trade the majority of it to Bitcoin if I follow just an Ether Bitcoin strategy. It would have to go up to a much higher risk level than it is right now. We're not even above 0.5. If you guys like the content, remember to subscribe. If you want access to the risk metric, the quantitative version, just the valuation of it, remember to check out the premium list. You can find the sale in the description below if you're looking for a way to navigate the market cycle. Again, this is my strategy. This is what I use. We have the sale. It ends today. So when I wake up in the morning, the sale ends. If you want to get access to it, make sure you sign up today. It comes with weekly reports, weekly premium videos, occasional premium live streams, trading view indicators, the risk dashboard, a Telegram alerts channel, and a Telegram chat room. And we have some more things coming in 2021. So if you want access to it and want to get grandfathered in at the lower price, make sure you sign up today. It ends when I wake up in the morning. Thank you guys for tuning in. Let's go for 80,000 subscribers. We'll see how far Ether can push it before we do see a pullback. It's an exciting time. Stay level-headed. Like, subscribe. See you next time.